Hey everybody, Chuck Barone here. Thursday, February the 2nd, 2023. A huge day today. Wow, what a day. And every day these markets surprise me. I gotta say, I've been watching these markets for a long time, guys. I'm old now. And to see the markets behaving like this. Yesterday I thought was kind of a not so great day for news, and the markets would go crazy. Today, a great day for market news. The markets don't. It's I don't know. But anyway, before we start the show, as always, I just want to welcome everybody. Thank you guys for your support. What you guys do for us every day, with your likes, questions, and comments, and sharing the video with people you know. We appreciate it, guys. We really do. Markets today, let's get into this a little bit, guys, because it was just the weirdest day. Okay, so a lot of data coming out, and we'll get into that after this quick market wrap. But a lot of data coming out, a lot of it very positive. Markets down. Now, the Dow was down, I should say, and that's the one everybody looks at. The market was down pretty good, rallied back up twice. So the market was tanking down around 200 points. Rallied back up to finish down about 35 or 38 points. The NASDAQ had a monster day, though. In the meantime, the bulls are off and running on the NASDAQ now. People going right back to growth stocks. The inflation's over. The recession's over. Any bad news is over. Here we go. And getting in early on the growth stuff. And that might turn out to be a good strategy, depending on how the data, if it can stay consistent like the data we got today. The bond market today, basically flat. Market, had a pretty big rally yesterday. So the market digesting that rally today. 10-year sitting at 3.39%, down 1 basis point. 2-year at 4 point. I can't even read my own damn writing, but it's 4.10 unchanged, completely unchanged since yesterday. So the bond market basically flat today. Dollar rallying, dollar up 0.85 on the index, 101.75. The dollar now, again, more mixed signals here, right? So the dollar, if the bulls in the market are right and believe that the Fed's, this inflation fight is pretty much done, the Fed will have room to pivot and cut rates later, the dollar should be tanking, right? If the bears are right and the inflation fight isn't over, and Powell will have to continue to raise rates and keep rates higher for longer, the dollar should rally maybe even a little more than this. So the dollar just mixed, but still holding its own at 101.75. Metals today, tough day for metals. Gold down 38, $1,913 per ounce. Silver down 52 cents, 23.54. Just, I guess now this sentiment that this inflation fight is won, maybe the demand for metal slackens off. I don't know. I still think there's plenty of room for upside on metals. We'll get into the commentary later. Oil today down 53 cents per barrel, $75.88 for a barrel of West Texas Intermediate. Hopefully these lower oil prices are going to lead to some relief for all of us at the gas pumps. I certainly hope so. Bitcoin today down small, $147. 23,574, still a good solid number for Bitcoin, and off and running. News you guys need to hear today. This is the part, there's some really nice numbers coming out today. Again, depending on how accurate all this stuff is. But the first top headline of the market today was employment rocks on, man. Wow. Jobs, jobs, jobs. We talked yesterday, 11 million job openings. 1.9 jobs for every person looking for a job. Today, employment claims reported falling to 183,000. That's the lowest in about a year. The forecast was for 200,000. The market was shocked last month when we got 186,000 because it was way less. They were expecting 225. Even less than the 186 this month coming in. So employment, and I guess it'd be pretty hard for the government to lie about unemployment claims. But I guess, depending on how tough the eligibility is for people, maybe they could fudge this one a little bit. But those numbers pointing to strong jobs market. At the same time, productivity growth accelerating, man. Productivity in the U.S. going. I hope the workers are going to get a piece of this growth sooner or later. Up 3% productivity in the fourth quarter versus 1.4% growth in the third quarter. They were forecasting growth 2.4% in Q4. So people have jobs. They're being productive on their jobs. So this sounds like pretty good news for the economy to me, guys. And to finish, unit labor costs, which was a really important one today. I wanted to see this number. This is a number I'm sure the Fed looking very closely at. Unit costs falling year over year in January, 4.5% growth in labor costs. Labor costs in 2022 for the year rose 5.7%. So this pointing to slower growth in wage and labor costs. Another good sign for the economy, for the markets. It's really interesting, guys. The sentiment, they said the people polled, the vast majority of them are feeling negative about the economy. But when they asked about their own personal finances, the vast majority say they're doing okay or well. So there's just this weird vibe like, is the economy crappy or not? Now, my particular case is different. I'm in the real estate business. These rate hikes have obviously hit our industry the hardest of any industry in the country. We were probably leading the inflation up too, though, because real estate prices were running amok. So now, in real estate for sure, well, I can tell you my personal experience, I'm feeling like we're in a recession. But these economic numbers say otherwise, which is just really something to me. And it kind of goes with what the market does, right? So we watched Powell's little presser yesterday. And what did Powell say? He said rates may climb higher than the markets want or anticipate. He said that he was pretty definitive that there will be no rate cuts this year. So Powell is he's telegraphing what's happening. Okay, he said that they may have to raise rates more times than the market anticipates. He said the economy is modestly growing. Now, the one thing about Powell, okay, love him or hate him, and most of us are not big fans of the Fed chairman or the Fed itself, okay? But the guy has done everything he said he's going to do. He's telegraphed every single move. He hasn't bluffed or given us Greenspan speak where you can't figure out what the hell he's talking about. He's been pretty blunt. So until that ceases to be the case, until he says one thing and does another, I'm going to take the guy at his word here and believe what he's saying. Now, the market, on the other hand, got a completely different message, because the chatter in the markets today is the fight is won. Inflation's coming down. The Fed has room to pivot. Wage growth slowing. Employment strong. Soft landing. You're starting to hear all these buzzwords. And it's just going to be really interesting as we finish this first quarter up and heading into the second quarter to see really where we're at. We were talking that they were expecting negative GDP in the first quarter. None of this we're seeing indicates that. Corporate earnings don't indicate that. So all of this just wacky, conflicting information really kind of making it difficult to get in a sense of the market's really, the bull market's on, the bear market's on, Now, we're not trying to be Nostradamus and predict that here on this show anyway. The basic principles that we've been talking about on this show, that we've been harping on since the very, very first day. Save 10% of your income. Invest your money conservatively. If you have debt, try to pay it down a little bit if you can. Above all, add no new debt if you can possibly avoid it. Be thoughtful the way you spend your money. It's okay to spend money. It's just not okay to waste it. So be thoughtful the way you spend your money and see if you can find a way to save a couple of bucks here and there. These are just very, very simple economic 101 stuff that truthfully they should be teaching our kids in high school. And but if you've been doing these things, you finished 22 okay. You know, you didn't have the giant collapse in your growth stocks because you weren't in them. You managed to save some money. You managed to pay down a little bit of debt and certainly didn't add any additional debt. You got the things you needed and the things you wanted, but you didn't waste money on frivolous stuff and stuff that you bought on impulse or thoughtlessly. Anyway, guys, we're going to wrap this week up tomorrow. We'll get more employment data tomorrow. It's going to be really interesting to see where we finish. I think that as the markets digest this information, and if earnings continue to come in decently, especially for the majority of the companies, you know, you got companies like Intel where their earnings are crap and even the bosses are willing to take pay cuts. The earnings are so crummy. Fascinating, wacky, crazy, nutty guys. We've been talking about the weirdness of this market, the weirdness of the environment in the whole country, politically, socially. I hope we can get a bull market rolling. Everybody feeling a little bit wealthier. Everybody feeling like the future is a little bit brighter than it is now with the doom and gloom and negativity everybody's feeling. I've been saying for a long time that even if we have a recession coming here or we're in a recession, it's not going to be a real deep one. We're not looking at 2008-9 again here, guys. So let's keep our heads up and rock and roll, man. There's money to make. There's angles to play. We're going to talk about all of them. Anyway, guys, that's it for today. It's a wrap. We'll be back again tomorrow, Friday, to wrap the week up. Hopefully you guys had a decent day today, you growth stock guys, and you know, I think that there's positions to make money now. Stocks, I think bonds, if you're holding bonds, you may get a little bit of a bump in the value of those bonds as rates continue to drift down, even mortgage rates coming down. Fascinating stuff, guys. We're going to keep you on top of every little bit of it. We'll be back tomorrow. Till then, take care. Thanks.